Hi forex traders, so welcome back. This is Carrie's Trading Institute, and today we're going to take a review on the dollar and foreign currency, right? So we see what's our expectation for the dollar today and going into the week as well. All right, so the first thing we need to do is to go to our forexfactory.com to check what's happening on the economic calendar basis. All right, on the fundamental basis, we need to check the economic calendar to identify times when we should see high impact or medium impact news coming into the marketplace. All right, so this is Tuesday, 4th of April 2023, and as we can see today, we are expecting a high impact news on the Australian dollar, 5:30 a.m. GMT +1. All right, and we're also expecting a high impact news on the dollar, right, around 3 p.m. GMT +1. So make sure your time is or you convert this to your local time wherever you are watching this in the world. Just check the economic calendar and then set the time to your current local time and check what this is in your own time. So these are the only news events we're expecting today. The dollar and the AUD, we're expecting a high impact news coming on these two assets. All right, then the next thing we should do is to go to the dollar index chart and identify what institutional order flow is saying, especially on the higher time frame. All right, which is weekly, monthly or daily, monthly, weekly and daily. All right, so this is our weekly time frame chart of the dollar index. All right, if you go to the monthly, you might have more details to what this is. So this is the monthly time frame. We've seen the dollar traded into a discount, traded into volume imbalance right here, and is heading to the downside. All right, so where would be my next drawn liquidity? All right, my next drawn liquidity will be the sell side liquidity residing below this level. All right, and also price may trade into deep discounts if we are going to continue bearish, but as we do our top down analysis, we are going to have clarity on where the dollar is going to draw into. All right, so this is the weekly time frame, and on the weekly time frame chart, I would like to outline this candle wick and mark 50% of this candle wick. All right, which is consequent encroachment. I would like to see the dollar trade into at least 50% of this candle wick before it starts to retrace to the upside if we are going to seek buy side liquidity. All right, because in the last few weeks the dollar has been bearish, especially on the weekly time frame, and it has created some kind of sell side imbalance, buy side inefficiency, because this is a one-sided delivery. All right, so we might see a repricing into this imbalance, the fair value gap, or ultimately even trade above the buy side liquidity here and trade into that drawn liquidity on the weekly and monthly. All right, which is this fair value gap before we start trading to the downside. So currently I would like to know where 50% of this candle wick is. All right, I'd like to mark 50% of the candle wick between the high here to the low. Then I'll pick this and mark out 50% of that candle wick. That is also consequent encroachment. All right, so this also might serve as a level of might offer a level of support to price. All right, and my video reason price will seek these inefficiencies, will rebalance these inefficiencies. Then let's go to the daily time frame and see what that is. Then on the daily time frame, of course, you know where we are. Price is still sitting on that bullish order block, and price is still sitting on that bullish order block, and the bullish breaker, right? Price from the lower low gave us a shift of market structure, returned into that very level here, the bullish order block. So we would like to outline 50% of that bullish order block, which is going to be our order block main threshold. All right, if we are truly going to go bullish, we don't want to see price trade below that level or violate the order block main threshold. Okay, so you can see price also closed that volume imbalance we identified yesterday as our drawn liquidity. Price had closed it. So to measure 50% of the order block main threshold will simply mean we pick our Fibonacci, then measure between the high to the low of the candle, then mark out 50% of the candle, which is going to be your order block main threshold. All right, the black candle here is my bearish candle. Okay, so so that's it. So that is my order block main threshold outlined right here. I think I don't need, okay, this is the weekly. So you can see price traded into the order block main threshold. All right, so we need to see a confirmation that price is going up. Once we see a 1 hour creating a shifting market structure to the upside, it tells us that all right, this will form the low of the week, and we're going to seek buy side liquidity residing above this old high inefficiency. This will be the drawn liquidity going into the week. And NFP, don't forget Friday's NFP. You don't want to be in the marketplace after today New York session, but for your study you should be looking at the markets to learn from the markets. All right, so let's go to the 1 hour time frame. This is my simple method for doing top-down analysis. All right, so currently I think I'm seeing something very interesting. This is the 1 hour time frame. Price formed lower low. We'll take note of this. Price has formed lower low. All right, peradventure, if price fails to form higher high on the foreign currency, then that is an SMT divergence, and this is confirming that we are going to go up on the dollar, at least to rebalance or seek those buy side liquidity levels right above these highs and these inefficiencies, these old highs, all these will be our drawn liquidity to cap the week's price action. Remember also, when you confluence weekly market profile, Monday, Tuesdays, Wednesdays should form either the high or low of the week, and then you get the true distribution from Wednesday possibly into Thursday, and Thursday New York session gives you the weekly reversal models, or Friday also can give you the reversal signature. All right, so how did we take a trade yesterday? Just a recap on yesterday's price action. I just saw it here, forgot to do that. This was yesterday. All right, after this was yesterday in the London session, I was looking to short the dollar and I bought GBPUSD. So why did I short the dollar? Simply because the dollar, as at London session, prior to London, the dollar was in a consolidation. As at London session, the dollar traded above the Asian high. All right, what's the Asian session? Between 1 a.m. GMT plus 1 or 12 o'clock GMT to 5 o'clock GMT. All right, so price traded above that high and traded into a fair value gap right here, an institutional reference point. This was the very point I started to short the dollar and I bought GBPUSD. So where was my target? This was the drawn liquidity, old low, and that volume imbalance was the drawn liquidity. As at this point, we were no longer in the trade. All right, so let's quickly check again 15 minutes time frame clarity. So what are we waiting to see? We are waiting to see a shifting market structure in London session. The London is going to open just few minutes from now, less than 20 minutes, and if price gives us the confirmatory signature, then we will start to go up. Now look at today's price action. Price opened with a gap open lower, which is to tell us that this is supposed to be a bearish day, but it got violated right here. All right, so two things I would like to do is to mark out this level that got violated should provide some level of support. The next time price trades into it, it should offer some level of support for me. And again, I would like to buy once price trades below the 4 a.m. candle open. All right, the 4 a.m. European time candle opening. So this is the 4 a.m. Preferably, if price trades below the low of this candle, I would like to be a buyer. All right, so that is that on the dollar. So you just go to GBPUSD or your foreign currency that you like to trade and identify that sort of so let's do this. So you can see that we have that SMT divergence. This is Euro USD. Euro USD could not form higher high. Alright, the dollar has formed lower low. Euro USD could not form higher high. GBPUSD has formed, could not form higher high as well. Alright, so this is SMT divergence. Okay, we will just be waiting for time and price to blend in the New York in the London session before we start to take trades. Okay, so just go to the daily time frame, see what happened on the GBPUSD. So price traded into this bearish order block and implied fair value gap, 50% of this candle wick, 50% of this candle wick. When you outline them, that's a type of fair value gap, right? And we then started to see SMT divergence forming between the dollar and GBPUSD. So in London session, we like to see clear displacement to the downside on the lower time frame. We like to short once price returns into internal range. All right, so currently you can see that price has been consolidating. All right, this is time distortion because the time is not a good hour to trade. Okay, so price gave us a shift of market structure right here. This is price took out the high here. I can just do it this way. Price broke the low here. Price traded into the other block. Expansion to the downside took out external range liquidity. We like to see a return into internal range in London, so that we like to start selling. We'll start selling once price returns into internal range. So which of the internal range am I looking at? I'm paying attention to this, above 50% is most preferred, or at 50%. So this is 50%. You can see this fair value gap is a bit higher or above 50%. That's where I'll be looking to short this guy, while I buy the dollar. Okay guys, so guys, if you like these lessons, please don't forget, hit the subscription button. It's free. Just click the like button, subscribe to this channel, and turn on your notification bell so that every time I start to I'm doing live sessions, you're going to get notifications for it and you're going to join me. Also, don't forget to join my free Telegram community. The link is on the description of this video. Until next time, I wish you good luck, good trading, stay safe.